What's up, YouTube? Dougie Chong here. Welcome to today's episode where I'll be giving you a quick portfolio update and going over some general stock market conditions. So from my last video, I put in an order for 75 shares of Carnival Cruise stock. I put the order in at $42.60. I'll show a screenshot of my portfolio here, and I was able to get this order filled. Since then, Carnival Cruise stock has fallen a bit. I think it's around $41.70 now. So it's even less than what I bought it at. So here's a close-up of the holdings I hold in my simulated stock trading portfolio. I hold 75 shares of Carnival Cruise stock, 15 shares of Facebook stock, 20 shares of iRobot stock, and 15 shares of the S&P 500 Index Fund VOO. The only position in the red, as you can see, is CCL, in which I have 75 shares bought for a price of $42.60. Right now, those shares are at a loss of 2.11%, but it's only about $3,000, and if it continues to go lower, I will dollar cost average and buy more. The second stock I have in my simulated stock trading portfolio is the stock Facebook. I have 15 shares of that one, and it's only up 1.28%. Again, I haven't held it that long, but I bought it at $207.35. I would really like to build this position out bigger, but I will only do so if the stock drops to around $200. This is a company I strongly think will do well in the future and is a leader in the advertising space. The third stock in my portfolio is the stock iRobot. For those of you that don't know what iRobot is, they make Roomba vacuum cleaners or robotic vacuum cleaners that clean your floor for you. This position is up a small 1.11%, and I would look to buy more if it trades for around $47 or so. The reason this position is fairly small is that a lot of its earnings are dependent on political factors such as the tariffs that the US charges on goods made in China. These are very difficult things to predict, but I think if iRobot can move its production elsewhere, it has a strong chance of succeeding due to its strong brand recognition. And coming down to the final stock in my portfolio is the S&P 500 Index Tracker VOO, in which I have 15 shares, and it's up a whopping 3.64%. This is supposed to be the safest index fund out of all the stocks I have, but somehow it is up the most. It just goes to show that it's important to hedge sometimes. Don't put all your eggs in one basket. The S&P 500 will generally go up over time. So there's an update of my current simulated stock market portfolio. It's important to note two main things about this portfolio. The first one is that I only put about $12,000 of $100,000 total. Now, if you have only $10,000, you could just scale that down to about $1,000 invested. And the reason for this is that there simply are not that many deals to be had in the market right now. I feel like a broken record saying this, but stocks are at very high prices, very high valuations, and it's not a good time to buy right now. However, if you do not have anything in the market, you should put a little bit in and get your toe in the water. And the second important thing to note is that this account is only up about maybe 0.1% over a 3-month time span maybe. But that just goes to show that nothing in life is quick. There is no get rich quick scheme. Day trading does exist and some people are successful at it. But to build your portfolio, it takes some time. And the only way to build it up is to get started today. To show how crazy the stock market has gone recently, I will show a stock that has gone up about 5 times in only a few months. This stock ticker symbol is SPCE, and it is the Virgin Galactic space stock. This company promises to be the first in space tourism, where they charge about $250,000 for a short trip to space. They do not have a viable business model yet, and somehow this stock has skyrocketed to about a $6 or $7 billion market cap valuation. Since reaching highs of about $37, it has cooled down to about $33, but it is still a ridiculous valuation for a company that has not shown profitability yet. Now, if you are extremely bullish and really believe in the space industry, then maybe you might want to buy it and hold for about 15 or 20 years and hope for the best. But if you are looking to ride the wave up, thinking this is just a short-term dip, this is not a very good strategy. This is how a lot of beginner investors lose money. They see the steep rise and think, oh, I can just get in, get out really quick and make some money. Most often than not, you will be burned and you will lose money there. So in my opinion, space stock is not a buy. But again, I am not a licensed financial advisor. Please do your own research. That's it for this video, guys. Hope you learned a little bit about space stock and enjoyed seeing my portfolio. Leave it in the comments below. What do you think about space stock? Me personally, I'll be looking at more fundamentally sound companies such as Carnival Cruise Lines. Thanks again for watching, and remember to subscribe and like if this video helped you at all. Leave a comment if you have ideas for future videos or just want to say anything at all. Thanks again for watching.